Welcome to Bitcoin Technical Analysis. Today I'm here with George Samman and Tone Vays. How's it going, guys?
Going well, thanks.
Yeah,
Ec-
rough days in the market.
Yeah, there's definitely some volatility, and we've also seen some movement in Bitcoin. So, George, what do you have for us today?
I'll start off with Bitcoin. And I'll say that I'm looking at the 4-hour chart now, and I'm getting a little bit more cautious in the bullish case, even though the price hasn't really done anything to tell me that it's going to go a lot lower. There's starting to be some cracks in some of the or at least warning signs in some of the indicators. I mean, I was leaning short last week, like I said, and we had that spill from above 450 down. Right now, you're seeing the moving averages starting to slope downwards. Prices stayed over this 429 level, and that's been pretty critical here. But you have a MACD crossover that's positive, but you also have an RSI that's low, and then these moving averages that are starting to roll over a bit. So I'm a bit cautious. I think we could be at the very least range bound here, but as I drill down into some of the other charts, this is the daily, you're starting to see the RSI deteriorate. You see a MACD negative crossover there, bearish, and the price is getting closer and closer towards its 50-day, which it hasn't done in quite a while. While again, there's no reason to really start thinking about getting really bearish here. It's just a little bit of caution. And the thing that's starting to worry me a little bit is the weekly. Um, you see the RSI starting to come down, but even more so is you're starting to see the MACD. It's looking like it might cross over bearish, just starting to roll over a little bit, hasn't yet, and the commodity channel index is starting to come down. Price is still above, it's 50 and 100 week, and obviously the 200 week, but I'm just thinking that we could see a little bit more of a correction in here than we have been, unless we start to see some improvement in the price and the indicators follow. Um, Here is a chart that we look at a lot, which is the spread between the onshore and the offshore yuan, and we saw this massive down move. It kind of came at about the same time as the Bitcoin price started falling. I mean, we're not going to say that that's the only reason why, because the block size debate thing also happened that day, but this has been the chart to watch to see where the Bitcoin price has been going, and it's been going up and down kind of with it. Prices start to stabilize, and as you can see, the offshore yuan has started to move back up against the onshore yuan. So that's something we like to look at. And here's the Shanghai. Shanghai held right where it needed to. Had a day today where right around that 2,900 level. It held today. Still not looking great, but at the very least, we can say it's bouncing from an oversold level. But I mean, there's nothing to really look at here except to say that the Chinese market is really in a disaster area, and you could just tell that really based on the chart that I just showed you here, which is the Chinese are giving mixed signals, like they don't have any control over their monetary policy. One day they're devaluing the yuan in a steady, orderly manner, then they're letting it float even faster, and then they just let it crash back down, trying to control capital flows on and offshore and make it harder and harder to short the offshore yuan. And then here you see a chart of Chinese policy and the Shanghai. I mean, they've come in, cut rates, lowered deposits, cut the ratio reserve rate, supported the market with swaps, done all these kinds of things, trying to intervene to stop the slide in the markets, and it's made things really worse. I mean, as you can see here, all these moves have done nothing for the market. It bubbled and it's just continued lower. There's no confidence right now. And then, recently the circuit breaker thing that happened, they put a circuit breaker in and they took it out, and people just are losing confidence, and the Chinese themselves need to get that back, and their monetary policy as a result. No one knows what's happening, and there's a lot of uncertainty, and that's really been one of the reasons why the whole entire global marketplace has been in shambles. And then, this is a chart of Ethereum, and this is Ether, and we've talked about this before. This is a 4-hour chart, and we liked it when it was in this really like coily, windy place on the daily chart. You saw it like that, and it broke out. Like we said, we thought it was going to break. We were bullish, and it had a 10% move. It's now at 106. We kind of were talking about it when it was in this 95 level or something like that. So, it looks good still. might have a little bit of a consolidation here, but it's probably something bullish that you could buy. Here is the performance of all things since the beginning of the year, and as you can see, the only things that have done well are the Treasury bonds. That's the price, not the yield, and then the dollar, euro, and gold. Everything else has gotten absolutely hammered. This is just since the beginning of January. We're only 12, 13 days into the year. Um, this is a U.S. dollar chart, and it's showing. This is a weekly chart. I mean, you can't say anything wrong with this. In fact, it just keeps on going to new highs, and this has been another problem for the markets. And in fact, something that you have to look at here is the MACD on a weekly is about to do a bullish crossover as well, and the RSI looks great here. So you have to think the dollar keeps going higher, and that could be really destructive for a lot of currencies in the commodity complex in general. Weekly of the Euro USD continues to trade below its 30-week moving average, really just right at that level that I've identified as a big support zone, but it doesn't look good. I mean, it's probably if the dollar keeps going up, euro probably doesn't do much of anything, probably starts going down. Here is the yen dollar. This has actually been problematic for the market because it has broken out. The yen is usually a flight to safety, and you see that in times when markets and the world is in turmoil, as we have been lately. As you can see, it traded below its 30-week moving average for most of the up movement in the S&P. So these things kind of trade inversely. It's still above the 30-week. We'd like to see it weaken. That really would propel a rally in global markets and particularly the S&P. Here is the Aussie dollar, and I put this here just to show you that some currencies are not strengthening, and they're the ones that are tied to China and commodities, and the Aussie dollar is both, and it looks bad and looks like it could get worse. As you can see here, this is another weekly chart. The MACD looks like it's about to roll over here. RSI has done not much of anything, maybe a little bit of a positive divergence, but price is just way below its 30-week. Here's an hourly S&P chart. I put this trend line in here to show you the downtrend. Today we got above that level after all the turmoil we've had since the beginning of the year. Right now, you're seeing the last candle. It's a bearish one, but still holding right above that downtrend line. That's the line we need to hold for to get a rally here, and I think we probably will hold it. So that's all I have on the S&P right now. This is another thing that I like to look at, and this is my main charts for looking at overbought and oversold levels. And we got all the way down to minus 90 on the McClellan oscillator for the New York Stock Exchange before we got this big bounce today. Usually when you get into levels 70, 80, you're looking to bounce. I mean, yesterday was a perfect setup to bounce. It didn't. Today it did. But when you see levels like this, you start looking for long positions. Same with the NASDAQ. It got even lower. It went down to minus 85, almost back to those August lows, and it bounced big today. So, I mean, when we see these extreme oversold levels happening, we got to start looking for longs and for, at the very least, a rally to bounce into. And then finally, my last chart is the 10-year, and that's the yield. We know what's been happening there. Bond prices have been going up, yields have been going down. But the one interesting thing that I looked at when I saw this was, as bearish as it looks and as bad as it's been, it hasn't gotten anywhere near the lows, which is in that 19.5 area. So there is hope that yields will start to rise again at some point. I mean, if you look at all these moving averages, they've compressed together. The RSI actually doesn't look terrible considering all the action. It kind of is diverging slightly. But I'm not saying you buy anything here in the yield space, but there is hope that perhaps this rally can last, and maybe we see some positive things start to happening, and we got the big correction we wanted, and markets start to go higher here. That's all I really have for today. Thanks, guys.
Thanks a lot, George. Okay, now, Tone, tell us what you've got today.
All right, I actually liked some of the things that George had to say, especially his chart of China, the one where he showed all of the Chinese central bank actions versus the price. And I just find that incredibly disappointing. I mean, I really had high hopes for China. I was expecting China to be the next world leader, just like the US has been for the last 100 years or so. I was expecting that to be China in about 20 years, but if they keep manipulating their markets, I mean, it's just terrible. They really need to trust in the free market. They just gotta let it go. Oh, and George also had that chart of Ether, which is now getting close to $1. I so think Ether is going to zero. It's just taking its sweet time getting there. But that's a discussion for another day. Let's just say I'm not a believer. All right. So I have my Bitcoin chart up. As usual, this is the Brave New Coins Liquid Index. And there's a couple of things. So let's start off with last week, we had this little bump. Let me mark it off right on the chart here. So last week when we shot this video, this had just happened. And that caused me to go from short-term bearish to short-term neutral. Now, I just want to clarify that I am still pretty bullish on Bitcoin overall. It's just that temporarily it's overpriced, and the technicals are also telling me that it's overpriced. So when we had that little bump and it looked like the MACD was crossing over, I conceded the bullish case to a neutral case. But now that we're back to the 430 area, I'm back to short-term bearish. And there's other reasons for that. One of them I marked off on this chart, and I labeled it very, very clear bearish divergence. Now, it's only clear when you consider end-of-day prices. And end-of-day prices are really important because your indicators like the MACD, like the RSI, and even volume, they're all calculated based off of end-of-day values. So if you look at that irrational spike to 500 in very early November, oh wait, can't see the date. Let me drop this down. There you go. When you look at that spike to 500 in early November, that was intraday, and then the following day when we spiked to 450, that was also intraday. The end of day close, the highest end of day close we had was around 425. And then we had several end of day closes around 470 a month and a half later. So the price went up, but your indicators went down. The RSI is clearly lower. The MACD is clearly lower. Those are the two indicators at the bottom. And the volume is clearly lower. Also, because this is an index, this is the volume from 10 exchanges combined. So it's not like it's biased for one exchange, like, oh, the volume just migrated. That's not true. This is volume across 10 of some of the more liquid exchanges that we have. So the price went up, closed up, but all your indicators are pointing down. In addition, there are several other things that are causing me to be short-term bearish. One of them, I'm still waiting for an RSI to close below 30. And another one is the MACD looks like it's just crossing over. I made it yellow for now because it's kind of flip-flopping. But if it has a few more days of going down and it starts to cross the zero mark, that could be pretty bad because you have support in the RSI, in the MACD right at zero, a little bit above zero, and also support in the RSI right around 42, 43, which could also fall a little bit. And that would take us down to 30. Also, we have, this is intraday, and I believe the close is like here somewhere, maybe a little bit below that line. Once these lines are broken, it's not good because there's no support. This is the problem when things go up really, really quickly. If we get an end of day close below 400, it's complete open air down to 315 where you can find some remnants of support. So you really have to watch Bitcoin carefully, not to mention all of the drama with the size increase again and scalability. So we're not out of the woods yet. So just be careful with Bitcoin. That's my general advice. Okay, let's move on to the traditional markets. So before I jump into today's S&P, let me just briefly talk about this. So those that have been watching these videos for a few weeks now, they would know what I was calling for. Strongly recommend going back to the last 3 or 4 videos, starting with the year-end video. And I tweeted out these charts for each of the last 3 days as they were happening. So as you can see, I was looking at a repeating pattern, and I thought we had it right there. So I tweeted this out, and then the following day, this is what we had. So everything was looking good. We were looking like we were going to go up. And then yesterday, oops, hold on. Why am I struggling here? Here we go. This was 2 days ago. And then this was yesterday. And what happened yesterday negated this pattern a little bit. So these were my tweets. Those that follow me on Twitter, it's in the show notes, Tone_LLT. You will see me talking about this in real time. So now let's talk about what's happening right now. So this is the current S&P 500. And let's quickly talk about the backdrop. So what we have is, we have very clear support that was broken around 2000. We have a very clear high. And at the year-end video, before, I believe, where was year-end? Right, before all of this happened, my exact words were, expect a scare to the downside early in 2015 to get everybody bearish and then a swing to the upside. So as the fall was happening, what I put in these lines and I said we have 100 points. We have 100 points. So our target is down 100 points. So I was expecting a turnaround 900. I also stated very clearly that I was looking for a pattern like this, a pattern like this, which is also a pattern like this all the way on the left, but flipped around upside down, or a mirror image of it. So you got to flip that one over. And I thought we had it. I thought we had it right here. And I did go long. I believe I went long right in the middle of that second white candle. So I went long around that area. And everything was looking good until yesterday, where you can blame it on Obama talking economics, which he doesn't know, or for whatever reason, I got stopped out. It's a little unfortunate that I gave it a lot of leeway because I strongly believed in this bounce. I got stopped out near the bottom. And today we had the rebound. But I take this giant candle to the downside very, very seriously. So that is interfering with my original plan of a scare early in the year and then a shot up to new highs. So it's interfering with that plan. So because of that, as traders, we have to revise. Because we made a lower low after what looked like the bottom, I am still looking for a bounce. I am looking for a bounce to 1950, probably 2000. And after that, I don't think the low is in. So this is where I've changed my view of the future. I still have the same bounce. Unfortunately, my trading wasn't able to properly time it. Maybe I'll go long again. I got to see what's happening tomorrow. But I am no longer all out bullish. I'm still generally bullish S&P 500. I don't think we're going to have a 2008 style disaster. But now I'm looking for more of a dead cat bounce than a complete reversal back to all-time highs. But we'll see. We'll see where it goes. The last 2 days have been very, very strange. So clearly, I don't have any positions on the S&P. Otherwise, you would see it in this screen. So now let's talk about gold. So the interesting thing is, I also said, just like I expected S&P to turn around 1900, I expected the complete opposite for gold. And again, if you go back to the other videos, I was looking for a turnaround in gold in this area. But I wanted to see one of my reversal candles, which didn't happen. So because of that, I wasn't short gold, long S&P like I planned. I only went long the S&P, which is a bit unfortunate because had I gone only short gold instead to play the same exact reversal, I would not have been stopped out of the trade because gold did not make a new high. Gold continued to go down. Also notice that gold topped out 1 day earlier than the S&P 500 bottom 2 days ago. Yes, there was a lower bottom the last couple of days, but gold had its high 1 day before what I thought was the S&P bottom. So gold kind of turned direction first, which is important because it kind of tells you that gold is the leader. And gold also closed lower, so things are not looking all that great for gold. So just for general purposes, here is your very critical support and resistance, which we are now under. So I am looking for gold to most likely continue its downside as the S&P goes up. But then when the S&P turns around and goes back down, as I expect, then gold will go up. So my projection for gold would be something like this. Probably flirt with the lows, then go up, get the bulls and gold all riled up, and then make the ultimate low because I'm still expecting gold to fall under 1,000. This is still very critical support. If we break it the first time, it might be a bear trap, but we will eventually break it. At least that's how I see it. If I did short gold, if I had the right candle, the S&P gave me the right candle, gold did not, I would still be short gold. So finally, let's talk about oil. And you can see my position right there on the screen because I'm also expecting oil to go up, even though the dollar is going up, like George explained. But oil is just too oversold. And I did get some good reversal candles in oil. So I went in long oil. So just for general purposes, this was very critical support for oil. Let me make this smaller. Round numbers are always support, so 40 is important, even though it hasn't really seemed to act as support resistance very much, other than a breakdown below it. And you can see from my position, which I will also highlight where I entered it, just for followers. I entered the position. I entered this position twice, actually. I entered the position yesterday at exactly the same price of 30.50, right there. And then I entered the position again today at 30.50 because I had exited the previous one. And I have an hourly chart to briefly show you that. So where am I looking for a bounce? I am looking, and you can see my exit points. My profit is around 34.85, and I am very generous with my stop losses at 28.65, and I am in the futures market, which is very risky. One major point to listeners, you should not trade and follow another trader directly because several reasons. One, you may not have the same risk tolerance as a professional trader. You also may not have the same time horizon. You may not have the same triggers. So these were my stop losses, stop loss at my profit taking spot when I took the screenshot about an hour ago. They could already be different. They're not, but they could be in about an hour. So you wouldn't know. So if we go up a little bit, I'll probably raise my stop loss above break even so that this trade cannot cost me money. But I am still looking for an exit around 35. So very briefly, let me show you the hourly chart of oil, and I'll show you where I got in. So on my current position, I got in very late last night because futures trade almost 24 hours. So I got in after market generally closed. So I got in around this area. So I am long from here. My previous trade was at exactly the same price. And I got in that trade. Let me make it, I should have made these things green. My previous trade was also at the same price, and it was at around this area here. That was my previous trade. Now, this unfortunate candle was the result, this giant fall, was the result of oil inventory announcements, which came in positive. So what happened on this situation is once I saw oil start to fall based on that announcement, I gave myself a profitable stop loss around this area somewhere. So I got out of that trade with a profit because I didn't know how far it was going to fall. Now, also keep in mind, I viewed this as the bottom. So when it started to go up, for a second there, I thought I missed my perfect entry. And then after it crashed for, I'm not sure what reason, I don't even have a reason, but you don't really need a reason. It gave me a chance to enter back in right at the previous lows, which is why I was comfortable with that trade. And I am still comfortable with this trade. But if we go and make new highs, this is what I'm looking for. Once we make a new short-term high, I am then moving my stop loss up. I am going to move this guy over to somewhere in this area, just to make sure that this stays a profitable trade. So that's basically my outlook on oil. And now you guys see how I traded it. Still trying to time this bounce. I don't think oil has bottomed, but long term, but I think it bottomed intermediate to short term. All right, that might have gone on a little long, but back to you, Theo.
Oh, thanks a lot. Could you put your Bitcoin chart up again, please?
Sure.
I just wanted to see. So yeah, that, you know, divergence is a thing. It doesn't always play out directly, but that's a really long time the RSI has been diverging there. I guess since, you know, the 500 run up last year. That's a long time of divergence. So, you know,
that's a month and a half. And look, the bigger it is, the more important it is.
Right.
It's all
right. And what you
increment, and almost nobody looks at end of day prices. This is why this can go completely unnoticed on most traders' day charts. These are daily candles, and this probably goes unnoticed to a lot of people. So you really have to keep in mind that if you turn your chart into a end of day line chart, this divergence will just jump out at you if you're a professional or a semi-professional technical trader. If you're not, you have no idea this is happening.
Well, I think that I have to put up the RSI on a standard daily, but I think the divergence, you can see that on a normal daily chart for sure. Maybe it's just easier to see here, but also the volume dying out like that really clearly on yours, since you've got this averaged volume from 11 exchanges. That's also pretty interesting. So I just wanted to comment on that. Yeah, that's not just a little divergence. It's been going on for a while now. So that would have to really change to go to the upside at this point, I think.
Okay, right, and also keep in mind, we had in mid-December, we were closing around 475, and this past week, our highest close was around 460. So the price has dropped, and that is confirmed by the volume, by the RSI, and by the MACD. So you don't have divergence in the opposite direction from the previous two clusters of high closes. So you had big divergence between November and December, and you have confirmation between December and January. I know everyone is bullish Bitcoin, but technicals are technicals. They can be wrong, but you have to read them based on what they say.
Yeah, sure. And just like we commented briefly, there is a lot of discussion going on about block size. So we've got the median article indicator, and there's been a new one published. So I don't know if that's going to really matter, but Anyway, on my chart, we did tag the 1 day Ichimoku cloud and bounced off of it, but it still doesn't look that great. It could consolidate up here, but one thing that's the 26-day lag is well under the price. So in order for me to say neutral to up, I would like to see that lag go above the price, and would have to consolidate up here for a while. So let's see what happens. But I think that there's going to be some kind of movement right now. Everyone's really antsy about all the discussions going on. So let's just see what direction it goes. Also wanted to comment on something else. The hash rate continues to explode, continues to go up, and we just had a difficulty increase of 9%. So we still see miners piling on the hash rate up to the halvening, and the difficulty continues to rise. 9% is a pretty substantial rise. Of course, it's not as big as one we had on December 18th, which was a whopping 18%, but that's still a pretty big change. And just to touch on Litecoin really quick, the range has been tightening, so there hasn't been a lot of movement in the price. So you could say that that is due for some kind of price to the up or downside. This is the Litecoin to Bitcoin ratio, and the Litecoin USD looks very similar. The range is really tight, pretty much flat, has not really taken the up and down moves that Bitcoin has been doing lately, just a little underreacting. So that's been tight for a long time, and we could see some kind of movement going on with the Litecoin price as well. Okay, that's all for today. I want to thank everyone for watching. Make sure to comment below, make sure to give us a thumbs up, and make sure to subscribe to the World Crypto Network. Also, check us out on bitcoin.com. I want to thank you for watching and talk to you next time.